Welcome, everyone. Thank you so much for joining us for today's Appraisal Buzzcast. If you haven't already subscribed, make sure to do so below and get a notification as soon as we post. We've got such great feedback on our last interview with Chris Knight on how appraisals were done in Australia, we decided to make it a reoccurring segment. Today, we'll be speaking with Joan Trice, CEO of Allterra Group, and Reiner Lux, General Manager of HypZert, and Mattias, Fischer, Manager of Valuation for VDP, to discuss how appraisals are done in Germany and what Americans can learn from them. Joan, I'll hand it over to you.
Thank you, Jim. To the audience here, I've known these gentlemen for some time. In fact, I even visited them in Berlin, about 4 or 5 years ago, Reiner, I think it was. That was a fabulous opportunity. And hopefully once the pandemic lifts, I'll see you again in person soon. So let's talk about the similarities and the differences in the valuation process in Germany versus the US. And I think one of the things that I learned from you, Reiner, was you have an interesting definition of market value or value that is quite different than what we have in the United States. So share with us a little bit about how you all perform valuations.
Yeah, maybe I have to explain 1 or 2 sentences that our organization and also the Association of the Mortgage Bankers, we are working for the Banking Association. And it might be a little bit different to the public valuations when family might be buying a flat or a house. Then the appraisers, the public appointed appraisers very often do this valuation. But we do this for the banking industry in Germany. And of course, it is necessary on the one hand to do the valuation on the market for the market value. And that is very specific, I think, in Germany that our banks need also a mortgage lending value. And when I look to the philosophy or to the way on to doing the market value, I think more or less it might be quite the same like you do it in the United States or it is done on the whole world. We have a very specific situation that we have in Germany as land value, and there's a specific which we named Bodenrichtwert, that is values who are published by the states. And they give you an idea of what is the price for the land. I think that is a little bit different to other countries, but otherwise I think the market value is quite the same like on the whole world. Different.
But let me interrupt for a minute. Don't you focus more on a sustainable value? I mean, we're sort of that one point in time.
Yeah. As that is specific, very specific on the German side, and that is a sustainable value. But on this way, I would say that Mattias maybe explains the real difference between the market value and the mortgage lending value is the sustainable value.
Okay.
Yeah. Thanks, Reiner. I am trying to do it. I would say the main difference is that a market value is kind of a spot value, which is in place for a specific point in time, and the mortgage lending value should be a value which should be achievable and sustainable over the life of the loan. I think to maybe understand it a little better is to understand the German Pfandbrief banking system. There's on the one hand German Pfandbrief banks, and I'm working for the Association of German Pfandbrief banks. They grant loans to borrowers on the one side, and
Mattias, let me interrupt for a minute because I don't think our audience knows what a Pfandbrief is. So would you explain that? Yeah.
A Pfandbrief is kind of you can say a mortgage-backed security. So where the bank is not only where investors which buy Pfandbrief, they have some assets as an additional safeguard that they get back the money. So there's not only the credit worthiness of the bank, but additional these assets can be they build an additional safety for the investors which buy these Pfandbriefs.
So a fund brief is a bond.
Yeah, exactly.
Okay, got it. All right, sorry to interrupt.
Sorry. So they are granting loans on the one side, and they are refinancing themselves, so the banks, with issuing fund brief. And for that purpose, they have to make sure that these assets, so the properties, have to be valued in a certain manner. So they have to be guaranteed that these values are stable over the life of the loan, and that in a worst case scenario where prices are shrinking, that even in that scenarios, there is a still stable and achievable value that can be guaranteed even in a market crisis scenario.
Okay.
Maybe I can add one sentence that the duration of the loan, where the income rate is fixed in Germany, is around 11 years. And that is maybe very specific. In other countries, you have very often the duration of the loan, maybe where the interest rate is fixed, maybe 2 years, 2 years to 3 years, 4 years, or no fixed interest rate. But the very specific of the fund brief is that the duration of the fund brief, the loans must be the same duration. And this is a moment around 12 years, I think, Mattias. I think
I think that's kind of 10 to 12
coming from
years,
8 years, maybe 6 or 7 years ago.
Okay. All right. Well, let's
it's a
do
little
this.
decreasing. Yeah.
Let's take a break for a commercial message, and when we come right back, we'll pick up and maybe talk about how the pandemic has impacted your real estate economy in Germany. Jim?
Stuck in the appraisal management technology dark ages, using spreadsheets or antiquated software, you should meet Evo. Evo is the most innovative appraisal management technology on the market, trusted by lenders and AMCs. And it's loaded with mind-blowing features like sophisticated decisioning algorithms to select the best appraiser for each order, the ability to configure forms and fields in real time, a user role-based design, and the industry's only compliance guarantee. Find out more at globaldms.com or call 877-866-2747. Joan, back to you.
Okay, so let's bring everything to the current events. How has the pandemic impacted your real estate market in Germany?
Yeah, maybe one specific on the mortgage lending is because the loan is running for the next 8, 10, 12 years. That is different to the market value. Market value, as Mattias mentioned, is a spot market. But mortgage lending value, we must have to look into the future. That means not that we have a glass bottle and a crystal ball where we can see it. You must make research. You must do the research, what happens with this asset class in the next 5 years. And that was also the reason that we are, when we were asked 1.5 years before, what is coming on the market for the next month because of COVID, we said in Germany we don't expect that on the residential market would happen a lot, because the people must live in a house and there are the changes from today. There are not great changes from today to tomorrow. I think the German real estate markets, the property markets, they were also issued by our sister company, the VDP Research, said that there was a plus of 6 or 7% in 2020. And also the first 6-7 months in this year, we see an upgrade of I think, or increase of 2 or 3%. That means the residential market is fine. Same the office market. I think it's more parallel. There was no increase for the last month, but there was also no decrease. And the logistic market was also had a plus of 2.5 to 3% in the last year, and also the last 6 months of this year we see that the logistic market is also growing, and the prices. And the problematic of the course is the market of the hotels. And I don't know, Matthias, want you to tell us something about the hotel market?
Yeah, maybe I can also add some thoughts on the stability of the values in that context, and I think that might be of interest. So I can, yeah, of course, we got the same problems for hotels, like probably over in the entire world, due to Corona and due to very little hotel reservations and stuff. And also we got these problems with the with the retail, where we have like e-commerce, which is growing, and of course problems for
Supply chain problems like we're having.
So supply chain, I'm not sure about that, probably a little, but I was more thinking of like shopping centers where people tend to buy things online and not visiting anymore. So, but I think that are some trends and structural problems which were there before we got the COVID-19 pandemic. But coming back to the values maybe and the mortgage lending value, I have maybe to add that mortgage lending value, as Reiner already said, are very stable and conservative when they are calculated. We got some regulations where we got a bandwidth for certain parameters. And to put it short, you can say that mortgage lending values are always well below market values. So in general, for instance, for offices, when you have a market value of 100%, and if you stick to the rules for calculating a mortgage lending value, you maybe end up with like 50% of the market value as the mortgage lending value. And of that 50% of value, you're allowed to put only 60% of that 50% to use it for fund brief coverage. So you can, you can imagine that even in a crisis scenario like COVID-19, these values were overall very stable. Of course, there were some exceptions, like maybe shopping centers, which perform not so well. But overall, you can say that the mortgage lending value performed very well in that crisis, and that the banks were not obliged to correct their mortgage lending values.
Is it a fair statement to say that your real estate economy is much more stable than the United States peaks and valleys because of your conservative valuation process? We have a tendency to over leverage. I mean, that's the American way. Just borrow.
I think that's definitely true, and it is a part of the equation. But I would say it is also some kind of with some structural differences. We have a very big rental market, so our homeowners share is only 45% of the citizens of Germany own their own property. The rest is rental markets. And it is, if they buy a property, they hold it for a very long time. So it is not kind of an investment where you say, okay, I'm buying a house when I'm 25 and selling it when I'm 30. It's like I'm buying a house when I'm 35 and I'm holding it for my entire life. So that's more the German style of home owning. And I would say that this is also very big impact on the maybe little more stability of the German property markets.
No, that makes a lot of sense. So let's break one more time for a commercial message. And when we come back, I want to talk about appraisal independence, because we have struggles here in the United States, and I want to hear how you all handle that. So Jim?
Appraisers, if you've grown frustrated with endlessly pursuing new appraisal work and not reaping any of the benefits, Metro West is here to help. They understand and work to alleviate the pain points commonly felt by appraisers to enable personal and financial growth for their staff. After all, they've been owned and operated by appraisers since the company opened in 1987. Metro West Appraisal is an equal opportunity employer, and they're always looking for certified residential real estate appraisers to join their team. Visit metrowestappr.com/careers or email careers@metrowestappr.com.
Thank you, Jim. So, gentlemen, we've had a very famous sort of meltdown, 10, 11 years ago. We had the home valuation code of conduct imposed by the New York Attorney General on Fannie Mae and Freddie Mac. And the essence of it was that loan production folks were putting pressure on appraisers to inflate values. And how do you all in Germany maintain the independence of the appraiser and keep the pressures off of the appraiser?
One point is that we have this, it's a moment, HypZert was established 25 years ago. And 25 years ago, most of the appraisers or valuers which work for a bank work in a bank. They were employees of the banks. And then you have the situation in Germany that you have normally a kind of a Chinese wall. That means a four eyes principle. That means on the one hand, you have the valuers who do the valuation report, and a colleague make the plausibility check. That is the first Chinese wall. Second Chinese wall, in the bank, you have also a strong system of internal auditors. That means the internal auditor checks this the second time. Then if you do a Pfandbrief business, you have a third person in the bank who checked this value a third time. And on the other side, on the external side, the financial supervisory authority check it the fifth time or the fourth time, and the fifth time there's the external auditors who check this. And that might be the one reason that we heard in Germany not the numbers of complaints or whatever what we hear in different countries, I think. That is one point. And it changed a little bit in the last 25 years. That means around 50% of the valuers nowadays are internal valuers. The rest are external valuers. And you have the same Chinese wall strategy, as I mentioned before. But you have one more Chinese wall, because if an external valuers do the work, there's one another plausibility check as on the internal way. And on the other side, I think, and there's Mattias more familiar with it, that in Germany and in Europe, they are thinking about to change the values in different times. But I think, Mattias, in this case, you are the real expert.
Yeah, maybe I can add, as I already said, we got a regulation, a law on how to determine mortgage lending values, and we have a single article in it for the independence of the valuer. I may quote just a sentence that states the valuer must not be involved either in the loan acquisition or loan decision-making process or on the brokering, sale or letting of property. He must not be related to or have any other legal or business relationship with the borrower, nor may he have interest of his own in the outcome of the report. So I think this is, we had some, as Reiner said, we had some very bad experience in the past. And if a bank wants to issue Pfandbriefe and therefore has to determine mortgage lending values according to this regulation, he has to make sure that he's meeting these, the content of these paragraph. And we got a very strict and strong regulatory body called BaFin, and they are checking if all the Pfandbrief banks in Germany are meeting these requirements in terms of the independence of the value. So I would say this is has been an issue in Germany in the past, but at the moment I would say this is it's not a big issue.
Well, it's according to Reiner, you have layer upon layer of due diligence done at every turn, lots of checks and balances. And we have a transparency problem in the United States. We haven't gotten any better at it. I don't think, in spite of the Dodd-Frank legislation, I think it's something we still need to improve on. Well, gentlemen, it's been very interesting. I hope our audience enjoys it as much as I did. And thank you for joining us today.
Thank you very
Thank you
much. And
for having
hope
us.
that we will see also really in personal after COVID.
Yes, absolutely.
Okay.
Stop waiting 30+ days to get paid on your appraisal invoices. Cicada Capital is a simple and secure payment platform that improves your cash flow and reduces the time that you have to spend on paperwork and making collection calls. The process is simple. After the initial account setup, simply submit your invoices to Cicada Capital instead of your AMC or lender. You receive payment the next business day, while Cicada Capital collects payment from your AMC or lender, leaving you with more time to do what you want to do. For additional questions or to set up your account, call Cicada Capital Support Team at 208-953-7234. That's 208-953-7234. Or email them at support@cicady.com. That's support@sekady.com. Thank you,
Thanks a lot,
Mattias
Joan.
and Reiner, for giving us a peek at how valuation is done in Germany. It was very interesting. And thanks to our listeners for joining us, and our sponsors for helping us to be able to keep putting these together for you. If you have an idea for a future Buzzcast or would like to be interviewed, reach out to us at info@appraisalbuzz.com or head over to the forums and let us know how you feel. Thanks and have a great day.